Welcome to Trading Nation. I'm Eric Chemi. Today, let's take a look at the high yield market because the HYG high yield corporate bond ETF, it's on pace for its worst week since last August. Is this a yellow flag for the broader market? Today, we've got Matt Maley with Miller Tabak and Phil Streible is here with RJO Futures. Who should I start with first? I think Matt may have a fun chart for us today. So Matt, let's go with you.
Well, one of the things I'm a little worried about is there's a yellow flag. I mean, the high yield market was dead flat. The HYG was dead flat in January, and yet the stock market had a real good gain. In fact, this divergence that we've kind of seen has lasted for over a year now, where the high yield market's gone sideways as the stock market has rallied strongly. Now, the high yield market hasn't rolled over yet, but it's still a concern for me. One of the things I'm looking at on a near-term basis is the 200-day moving average. I mean, you saw in the late from 2016, the lows then, until last November, the 200-day moving average provided incredibly strong support. It bounced off it several times. It finally broke through it in November. Now it's bouncing up against it, and it's providing really good resistance. So this is what I'm looking for. If it can finally break above that moving average, it's going to be quite positive. However, if it breaks down below its 2017 lows, it's going to change it from a yellow flag to a big red flag. And these two markets are usually very highly correlated, and at some point they're going to, come back together. And so that's what I'm watching for right now.
Phil, you heard what Matt had to say. Do you buy that argument, or are you looking at this in a totally different way?
Yeah, I mean, as a futures guy, I tend to look at the 10-year note. In the 10-year futures, and interest rates for that have pushed through that 2.7%. We haven't seen that level in years. Really, investors and traders are going to start evaluating their current holdings and their portfolios. I really start to think that gold futures, they may turn into a bit of a dog. People are going to start chasing that yield. But remember that refinancing also costs more. Building and infrastructure all costs more. So it's really interesting. You've really got to analyze your portfolio, get down into the details. The devil is always in the details, and then you play it from there.
Matt, anything you want to say to that? I feel like I've got a good sense of your views here, so I don't know if there's much more to add.
Well, not really. Other than the one thing is we've talked for a long time. Everybody's talking about how high the yields, yields have been so low, and people have been chasing, chasing yields and really not getting paid for it in the high yield market. As Philip talked about, as interest rates have moved higher, that makes those low yields in the much riskier low yields not so enticing. So I think you're going to have to, as interest rates back up, so do the high yield market.
All right, Matt, Phil, thank you for coming on here. For those of you watching, thanks for watching Trading Nation. I'm Eric Chemi. We'll see you next time.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.